You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with the option block. Yeah, we were off for a little bit. Markets were closed on Monday, so we were away, but now we're back. Did you miss us? I know you missed us. I saw your email. I saw your tweets. I saw your comments. We're back. Don't worry. And we'll never leave you again. Just kidding. Until the next market holiday. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. You guys know how to get at us live via the old Mixlers. If I sound normal, it's because I'm back. I'm back in the old Chicago studio, out of the path of said hurricanes. Our thoughts, of course, with all those folks down there, including our friends from Fidelity. You may remember that a lot of the team based in that Jacksonville, Florida office down there, which unfortunately had to be closed for most of this week. So the rest of the Fidelity active trader strategy desk scrambling to make up for that. So as you might imagine, they are deluged, pun intended, with a lot of calls. So they won't be joining us today while they're scrambling to make sure everything is up and running over there. But they'll be back next week. So we wish them well in their efforts. And also for all our folks and friends over there, including our buddy Brian over there from Options Playbook Radio, who's now apparently in the path there as it moves into South and North Carolina of the storm. And all of you out there who are in the path of the storm, hopefully you're staying safe, battening down the old hatches and making sure you do all that good prep that you need to do when a storm is heading your way. Speaking of prep, we got a lot of folks here who've been prepping for a long time, prepping for about a week to come back on the program to talk to you fine folks. Let's start off over there in a land that I guess, I don't know, we'll have to check in with him, listeners. It's not in the crosshairs yet, but if this storm keeps making its way up the coast, it'd be kind of rare for a hurricane to make its way all the way up to Maine, but crazier things have happened. Let's welcome on the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. A, do you remember how all this works? It's been a week, so I'm sure you've forgotten your mute button discipline. And then B, are you in the path of said storm, sir?
You know what? I don't know if I'm in the path. I don't know. I am gonna clear some stuff off.
You may want to look into that. May want to check that.
I don't think we are, but I do have a lot of trees, which is problematic. But they've been up for 100 years, so I figured, if there's been hurricanes in the past, I don't think they make it. We get nor'easters, we don't get hurricanes. I think the water gets too cold up here, and then they just die out. I think, but I'm not entirely positively sure.
That's true. I spent the formative years of my life in southern New England, and I can count on one hand, effectively one finger, the number of hurricanes that made it up that far. And that was back in the 80s. So it's been a while. You're right. The cold water, not exactly conducive to heavy hurricanes, but still you might at least get some flooding up there. So worth paying attention
It's totally going to miss the coast of Maine. I guess it's a couple 100 miles offshore. I don't know. We'll get a little breeze, I guess. But I think I'm okay as of right now.
What we know is definitely okay because it's got the weather shields. Nothing bad can happen out there. Of course, I'm talking about St. Charles, where we are joined by none other than Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, sir, how go things on this fairly busy day, I hear, in St. Charles land?
Every day's a holiday. Every meal's a feast. What could possibly be better on an upmarket day? We're closing in on 3,000 again, the SPX. Stuff like this can get kind of fun.
I know you got it in your back pocket. You're ready to say it. Not quite yet, but we're getting there.
I can't wait. It's burning in me. It's burning a hole in my back pocket right now.
I can hear you itching over the line. That's how audible it is that you really want to say it. Instead, we'll keep on rolling into our first segment. Yes, it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Time to talk about what the heck is trading. It's been a while. It's been a week. What a week it's been. We're selling off, we're rallying. Today, the market's firmly in the latter category again. All firmly in the green. Everything, all the major indices up well over 1%. We've got the S&P, actually the laggard today, only up about 1.25%. Got the NASDAQ and the Dow both neck and neck, up about 1.5%. Each got gold taking a break, as you'd imagine. Crude also up. WTIP about 57 and change. If you want more about all that fun stuff, stay tuned for TWIFO coming up in about an hour and a half or so on the network, hour and 20-odd minutes or so. Or just hit the next button on your podcast player, wherever you're listening to this. You should have that loaded up for you there as well. And, of course, all of this green on the screen means mostly red on the old volatility screen with VIX cash off to about 16 even, about off about 1 1/3 handles, threatening that ticket. Did break it ever so briefly today. Got down to 15.5, actually. So now getting a little bit back up to the 16 handles. This has been a while since we checked in on it as well. Let's see what's going on our old friend Spikes. Out to about 16, down to, I should say, about 16.5. So still got that premium over VIX cash. 16.5 Spikes versus 16 in VIX land. Since we're talking VIX land, let's start in the land that is safe from hurricanes. At least he thinks so. Mr. Rock Lobster, what's been going on out there in a pretty topsy-turvy, tumultuous week this week?
I think we've had we've had a 21 to 16 VIX. That's what we've had. 24 last week, mid-20s the week before. So I think, and I wrote a blog on this option website, like everything about the trade war is good for 1%. It's basically, today I think we got a little overcooked because we have no deal yet. Everybody keeps forgetting no deal. So the algos drove us up. VIX goes down just because of the way the index is set up. But, we have a pretty hard move. I haven't pulled up my speculator yet. I've been a little bit busy this morning. But, at this point now, the SPX has to kind of settle down somewhat. We're still getting pretty big moves, pretty decent gyrations intraday. And, I think VIX at 16 is pretty fairish until we stop moving so much. That's the bottom line. I will say I think the biggest change now is that we have a fairly normal term structure for VIX. You got seasonality in December. You've got like the 18 handle. We traded 15.5 for VIX cash, which is like almost $3 below where the October future is. Yeah, I think we have I think a very rich contango right now, to be honest. So like it's solid. We haven't seen this much in like probably 2 or 3 weeks. And the market is still looking, in contango at a higher VIX in zone 2. All I say as far as vol is the market is still, we don't have that ultra compressed future to the cash, which is usually a sign of either a little more vol or they're expecting a back off in the VIX cash at some point. And at least right now, it's kind of settling in for what I would call like a high or, a fairly decent decay for the vol products. I think VIX cash could drop 0.75 of a point to a point by the end of tomorrow, or, we get another tweet and it's off to the races again. So, but for the most part, they're looking for a meeting in October. Everybody's probably waiting for the meeting confirmation, and we're in the up 1%, down 1%, give or take, every time there's good or bad news about the trade war. But, I mean, after, like TOSAW said, it's an up day, and we're close to all-time highs again. So somebody out there likes stocks. That's all I'm going to say. I don't know who they are. Maybe it's the fact that money's free across the globe and everything's wonderful, and you can still buy a bunch of stocks in the United States that yield 5% or more. So all I would say is that's where we are. But I expect at this point from the 16 handle for us to really get lower and lower. We need to see the SPX just has to stop moving so darn much, and it's not happened yet.
Yeah, someone out there likes stocks. I think that's probably a good way to sum up what the heck's going on out there today. Because you're right, we don't really have a resolution. You would think by the movement recently that maybe all was right with the world again, and yet you're right. It is one of those weird days. But people apparently, the buy signal has been flipped. I learned a long time ago. First walked onto the floor of the SIBO, and you talk to the old timers. Why are we up today? More buyers than sellers, kid. And I thought they were just obnoxious idiots. And over time, I realized that actually is probably really all there is to it at the end of the day. All right, let's keep on rolling. What's lighting up the tape in the land of the weather shield? Uncle Mike, silver's been moving of late. The metals have been moving. The S&P's rallying. Sounds like this is an Uncle Mike type market. So what's going on in your neck of the woods these days?
There's a whole lot of grinning going on, mostly by me. So yeah, it's a fun market. With silver in particular, we are moving, but we're still not moving quite enough for me to make an adjustment to any of my collars. So I'll keep everybody posted on that one. So a pre-apology for those of you typical TWIFO listeners that are listening to this show today. There's not going to be any movement on the collars. I've looked and tried, but I'm just looking at it and watching it go higher at this point. So can't really do too much. But unfortunately, today it's not going higher. But when you have this type of parabolic move to the upside, I think this is just with a pullback in order, or this is just with a pullback that's happening. I think that's well in order. But the other thing to think about is I think a lot of silver's movement to the upside, it's been twofold. I think recently it's been kind of news-oriented. But the other thing is that if you look at the upside of gold over the course of the last year or so, silver has not followed it, meaning that gold has come up, and a lot of times silver is, a lot of people refer to it as the poor man's gold. Silver has not come up quite as much as gold has, or not at the rate that gold has. So the second fold with which I think this rally is driven is that silver, gold gave silver a call and said, hey, get on the stick. We're in rally mode right now. And silver goes, oh, yeah, I forgot. I was sleeping. So I think that kind of happened as well. So we have that going on. Also, we are knocking on the door of 3,000 again, the SPX. I remember if you listened to some of our old shows, when the SPX was around the 2,000 mark, I remember referring to that as the magnet market, meaning it was really hard for it to get away from the 2,000 magnet. And it appears that right now it's continuing to do that. So in a lot of areas that in my risk reversal, for example, one of the things I'm holding off on buying some upside premium to it and just have the short puts in place. I'm waiting till we break over the 3,000 mark. I'll talk more about that in the strategy block today, special Thursday edition, by the way. But for the most part, I think this is a good day for those of us bulls out there. But with that being said, understand that 3,000 has been kind of a tough nut to crack for this market. So I would recommend just kind of being careful. But what the heck, I always recommend being careful. So I guess I'm not really saying anything new.
Nothing new there, but stay tuned for Uncle Mike's got it in his back pocket. He's ready to say it, listeners. His catchphrase. It's just not quite there yet. Let's see what is there in the old marketplaces coming into about 15, 20 minutes into showtime. Let's see what's lighting it up today. And the markets are moving, like we said, decent volume on the tape today. VIX closing in on 350,000 contracts. That's decent paper, especially considering it's been kind of light over the last week or so. We didn't have a vol views on Friday, listeners, so we couldn't break it down. We'll be back tomorrow. Don't you worry. So we'll get you caught up on all that goodness out there. But in between, we've seen VIX come in quite a bit. The ADV right now is shy of 600,000, 591,000. We'll push it down well over 100,000 contracts from our last show. So ADV coming in quite a bit. I guess 50 Cent is done, at least for the time being, out there in VIX land. SPY closing in on 3 million contracts right now, 2.7 million. So a pretty active day in the broad index out there. The ADV is a little bit north of 3 million, about 3.4 million. So it's closing in on that level already. SPX, same deal, about 1.05 million on the tape right now. ADV about 1.4 million. The Qs closing in at 530,000 contracts. The ADV about 730. And the Russell actually north, blowing through their ADV right now. 429,000 contracts going up in IWM right now. 416 is the ADV out there. Let's just look really quickly. Let's do a quick check of the RUT. Let's look at the RUT as well. RUT, 35,000 contracts on the tape. ADV is 41,000. So no matter how you get your Russell, there's a lot of different ways to do it. You can head on over to the RUT. You can do, of course, the E-mini Russell 2000 options and futures on the CME. You can do IWM. A lot of different flavors for your Russell 2000. But no matter how you parse it, they're all kind of lighting it up out there today. Speaking of lighting it up, let's see what's lighting it up in the individual most active equity options out there. Coming in right now, the top 10. Number 10, Netflix, $1.28 on the tape. Number 9, Roku. Don't see Roku up there too often. Roku lighting it up right now. 150,000 contracts on the tape. Number 8, Micron. 151,000 contracts. Number 7, NVIDIA, our old friend NVIDIA. Some interesting names rotating back into the top 10 there. 153,000. Number 6, a perennial top 10er, Microsoft. 162,000 contracts. Number 5, Facebook. Also a perennial top 10er, 167,000 contracts. Number 4, AMD. That's a perennial top 3er usually. AMD with 182,000 contracts on the tape. Number 3, GE. Also a frequent offender here in the top 10, if not in the top 5 and top 3. 199,000 contracts on the tape right now. Apple down to number 2 with 283,000. And number 1 with a bullet out here today, we've got our old friend, good old Bank of America, taking a big run today, doing 356,000 contracts out there. It's interesting. The stock's up. Stock's up about, not quite $1.84, so about 3%. A good day for Bank of America. But interesting nonetheless. Maybe they have some earnings popping off. We'll get to. Let's look really quickly, see what earnings are on the bell. Yesterday, after the bell, we had Slack. That was their first ever earnings since their IPO. And then we also, today, after the bell, we have Lulu. I know the meatball loves, and his wife in particular, are big fans of Lulu. They and their sheer yoga pants. Zoom Video also as well, popping off after the bell. So still kind of the tail end, shall we call it, of earnings season. If you want to see how the season has fared, I encourage you to head on over to theoptionsinsider.com. That's where we have our earnings move result, and indeed earnings season reports. So you can see how the season has broken down thus far. And if you listen to our Advisors Option show, you heard it from Matt himself over there at ORATS that it's been a tumultuous season, particularly the last couple of weeks. Some of the crazier stuff they've ever seen since they've been doing these reports. So it's worth checking them out for yourselves. By the way, the names that popped off this week, Slack. Let's pull up Slack first. I know the folks at WeWork are so mad that Slack stole their ticker. They took work a few months there before they went public themselves. So Slack slack, beating them to the punch. Trading right now 29.76. Let's see how it fared earlier this week. Going into their announcement, they were about 31.04, and then they took it on the chin down to 26.5, down $5. So a big beating on them, and then they pretty much rallied the next day, back up to 30.5 again. So looks like a lot of Sturm und Drang signifying nothing at the end of the day. What they were pricing in, according to our friends over there at Orats, they were pricing in, let's see, and $1.25 is what they were pricing in. So they dramatically outperformed what they have. Obviously, we don't have any past earnings moves to compare it to because this is the first one, but still $1.25. It's fair to say they blew the doors off that, and then they came right back. So it's a rare scenario where both sides could have won, the premium sellers and the premium buyers. The premium buyers, if you were quick on the trigger, and the premium sellers, if you were a little bit patient. You both could have fared well in that one. Lulu, we don't know how they're faring yet, but at the time of this report, they were at about 183. They were pricing in $13.5, and compared to past straddles and past actual moves they've delivered, I should say, that's actually pretty cheap. They've delivered in the past $21.70. So $7 cheaper, actually $8 cheaper than what they've done in the past. So maybe a surprisingly cheap straddle for Lulu. Maybe an interesting one to watch. Let's go look really quickly here and see what they're up to right now. Lulu 187.60, up $7. Wow, up nearly 4%. So maybe some of that news has leaked out already. But either way, big move here for Lulu. Looks like either way, that straddle pretty cheap. And before we move on really quickly, it is that time of the month, listeners, the beginning of the month. That means we have the numbers for last month from our friends over there at the OCC, a.k.a. the Options Clearing Corp, a.k.a. the world's largest equity derivatives clearing organization. They like to say that, so I thought I'd throw that in there for them. A volume in August, not surprisingly, August, bit of a rock'em one. 478.5 million contracts. That's a 10.3% jump from August of last year. The highest volume they've seen in August, with a caveat, since 2011. So 2011 was more. But beyond 2011, this is the most active August. And again, that's not surprising. This was a pretty active dog days of summer year. Usually you don't see that. Year-to-date ADV, these little bit of stormy days of summer have actually helped a little bit with the ADV. The ADV now for the year is only down 3.2%. It's about 19.6 million contracts, down 3.2% from 2018. Remember, it's been lagging quite a bit behind that. So maybe these stronger than expected summer months from a volume perspective will help turn the tide. We shall see. Still a long way to go, but closing in, it was down a lot more than that percentage-wise earlier in the year. Options, that's obviously what we're here for. That's what brought us to the dance. Exchange-listed options doing 469.2 million contracts. Remember, they clear other stuff at OCC as well, not just options, mostly options, but other stuff as well. 469.2 million contracts in August. That's up 10.1%. Let's drill down a little bit further. Equity options, 418.7 million contracts. That's a 9.1% increase from August of last year. That number includes cleared ETF options. If you break that out individually, that's 191 million contracts. That's a 31.5% increase from August of 28. That's a big jump, listeners. And then index options, you break that out, that's 19.6% up from August of last year. So a good jump there. Also worth noting futures. Remember, the lion's share of what they clear over there on the future side is VIX. And VIX futures were up 23.7% from this time last year. So pretty much wherever you looked, August was a boom month when it came to volume. The ADV for futures year-to-date still about 23% lower than where it was this time last year. But a few more months like August might help make a dent in that. Meanwhile, it's time for us to make a dent in some of our weird and whimsical names. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. These are the fun ones. We're just kind of going to read them live. Going to scan them and ban them, maybe. We'll find a better 1-2 for that. But yeah, a little bit of live read, always fun. See what's coming across the tape, hot and heavy here. Let's kick things off. What do we got? What's our Eye of Sauron delivering for us first? Actually, it seems like there's a lot of action out there today in MetLife. So we're going to start there. MetLife Inc. This is, of course, an insurance company, ticker symbol MET, M-E-T. Trading right now 45, almost 46 bucks. A couple cents under 46 bucks. Just ticked up, 45.99 right now. $1.52 up on the day, or about 3.5%. This is the name that over the course of the year has seen actually some action for an insurance company. They were trading about 40.5 about a year ago. And then they slowly have been up and down, but they've been pretty much net rallying. And they rally and they sell off a little bit again. But the net on the year has been upside mostly until about July, mid-July. They got up to about 51 and change, 51.16 is their 52-week high. That came around the July, August timeframe, actually July. And then they pretty much sold off. Looks like their earnings might have come in late July because they sold off pretty hard from about 51 down to about 45. And they kind of been vacillating in this range, but drifting lower, got down to 43.86 actually. So, and somewhere in this range, looks like it might have been, they must have briefly done intraday over the course of the maybe back in January. They hit it 37.76 for this name. I'm sorry, this is year to date. That's better. All right, a year ago they were trading 45. They're pretty much trading unched, about 46. And then they've kind of sold off in January down to 39. They hit that 37.76 level and then rallied back up to about 51 before selling off again in August down to where they are right now. Rallying today, they were trading obviously a little bit lower, $1.50 lower today until they got this little bit of a lift. So let's see all this upside. Let's see what's going on out here in Met. I'm going to guess probably some calls. Let's see if that's correct. Yep, it's calls. Actually, it's a couple of things. Met, first off, the big trade out here, one of the bigger single-name option prints going up today, Nov 50s going up for 43 cents. This is through the bid. They were 44 at 47. Let's see, 9,900 contracts total below the bid, a penny below the bid. Worth noting, they have earnings, but not for a while, not until October 30th. So someone crushing the bid. That's kind of the big size print we saw today. But also worth noting, that wasn't the only print we saw out there. Given today's upside move, not surprising to see also someone maybe trying to leg into a little bit of some upside. In particular, looks like a 5-handle bullish risk reversal also went up out there today. It was the ACK 47.5, 42.5 risk reversal going up 3,000 times. Pretty much, yeah, looks like a penny off the bid on the puts and a couple of cents off the bid on the calls. So kind of mid-market on the calls. I'm going to lean out and say they probably sold this, so sell the put, bought the call. So, a.k.a. a bullish risk reversal 3,000 times, doing it for 16 cents. So Mr. Rock Lobster looks like maybe we got a tale of two different traders out here. One coming in and saying, hey, this little pop here, I'm going to take advantage of this to dump myself all the upside I can get, in particular about 10,000 contracts. And we got someone else saying, you know what, I like this maybe, and I want to get myself a little bit of upside, a.k.a. a bullish risk reversal. What do you think is going on out here in MetLife today, sir?
Do you think this could be hurricane stuff? Possibly.
Probably, yeah. Hurricanes and insurance companies.
You know, the insurance companies kind of trade around hurricanes a little bit. They're sort of like the algo, slam them, all that kind of junk. It does feel like two different types of trades. I mean, Met is not a huge mover. I'm not sure if you would sell 9,000 calls against 300,000 shares of stock. But you know what? Is it roughly delta neutral? It just could well be a roughly delta neutral trade. So the 50s are, so that's two. So that's basically, it's 10,000 contracts at a 20 delta. So that's 20,000 deltas. And it's 300,000 shares of stock. So we've got, so that's 300,000 long deltas, and you have only 20,000 short deltas, right? I'm just kind of, maybe it's kind of a delta neutrally backs or front spready type thing with the risk reversal and then selling the calls above and trying to ride this. It's kind of this hurricane thing. I remember seeing a lot of trade in insurance companies around hurricane season. And, generally if there's any jump involved, they try to sell it. And they figure the insurance companies are going to survive, I guess, is the short answer. So
this could be related paper. The one thing that gives me pause on that is that they're about an hour apart. So this guy, he could be legging. He could have sold the risk reversal and let it rally a bit, and then dump the calls on the upside. He could have done that, but they were about an hour apart. So he's taking a little bit of a hiatus in between there.
Yeah, and it looks like we have different exchanges, but. It wouldn't be the first time somebody traded something on one exchange and then put the contra side on another just to screw the people that put the paper up in the first place. So it's not like we've never seen that before.
A big, nice gesture to you, huh? That's what you're saying? To keep the clean rating there in the iTunes store. All right, yeah, well, maybe, I'll tell you what we'll do. Because we like to figure out what's going on with these bad boys, we shall mark this as to be washed, and we shall return to Met, perhaps post-hurricane, and see how all this is faring. Meanwhile, it's time to roll on. Mr. Rock Lobster, I love having you on the show. You add a lot of wit and wisdom to this section in particular. But this is one we probably would be good to have the meatball, or perhaps actually, more accurately, his wife. Because next up on the odd block here, we've got Tapestry Inc., ticker symbol TPR. If you're not familiar with them, I wasn't really. This is an American multinational luxury fashion holding company. They basically own three big brands. They own Coach, Kate Spade New York, and Stuart Weitzman. So there you go. A fashion holding company, a.k.a. why the meatball's wife would probably have some insight into this as opposed to us fashion challenge gents here. But we'll struggle on nonetheless here. A year ago, this name was looking pretty rosy, trading 50.5. Wow. A way bit north of where they are right now. Trading right now, listeners, 22.71. So a wee bit south of that. And over the course of this year, it's pretty much been long, prolonged downside for the most part. Looks like they got hit in particular again back in August. They went from about 27 down to 19 and change in early August. Maybe they had earnings around that time. Yeah, it looks like that probably is around the time because their next announcement isn't until November 5th, so that would probably be in line with about an August 5th, 6th, sometime around that time announcement in that week. And looks like the market not liking what they're seeing. And today, though, they're liking it. The stock's up $1.50 or nearly 7.33%, back up to 22 3/4. So I guess rebounding their 52-week low, by the way, listeners, 18.5. So they're about 4 handles north of where that is. Let's see what we got going on out here. Maybe this recent pop lighten up some calls, and that seems to be the case. We've got the old TPR 25s lighten it up today, going up for 32.5 cents. The old school days. The old school numbers. I missed the fractions. 16ths, 8ths, all that good stuff. Let's see. 25 at 35 was the market on these calls coming out, and they went up for 32.5 cents. So near the offer, 5,500 and trace times here. This is opening over there on the Philly. Like I mentioned, no earnings in this one. Earnings aren't until November 5th again. So Mr. Rock Lobster, this appears. We saw this name selling off. Now we got a little bit of a rally. Looks like someone maybe feeling a little bit of love, maybe thinking Kate Spade and the rest have been overdone to the downside, maybe prepping for a little bit of upside and willing to pay to do it to the tune of 5,500 times. Do you think that's what's going up here as well? You think maybe they got a good fill and they're overwriting? What do you think is going up here in Tapestry, your favorite names?
Well, how about this one, right? You're telling me 5,503 contracts on the OCT 25s. I'm looking at volume today of 28,385 now. You guys were ahead of the storm. So they've actually put up 28,000 contracts on this strike.
Wow, a few more coming in since this alert came across our radar here. Yeah, let's get the.
I think you need to bang on the Flowmaster on this one because, And I remember, I think the meatball's wife doesn't like Coach. So Kate Spade, all these, maybe they're just brands that are sort of out of favor currently. Not sure exactly, but be that as it may, that's 28,000 contracts going up. Is it outside the earnings cycle is my only question. And I'm taking a look.
It is. The earnings are the 5th.
So
5th of November.
Holy gosh here. Let's see what our earnings cycle says. Yeah, we just had earnings on August 15th. So you won't see them again until late October. So, at this point, the options are, $2.50 out of the money. And I'm trying to look at the flow on it right now, but it kind of feels like it's either a newsletter trade and people are piling in big time and they're already up a little bit of money, or it's got all the hallmarks of somebody's going to buy the company, 50% discount. Open interest was 96 contracts. I mean, it's all a lot of small buying paper, too, like 10, 15, 20, 25, 30. It wouldn't surprise me if somebody's getting bullish on a little rebound in luxury retail or something like that. But it has a look of a newsletter trade, I believe, right now.
Yeah, I'm seeing this paper you're talking about now. You're right. 5,500, that's the print we saw. 5,500, that's the big print. That's what came across our radar. But if you dig a little bit farther, listeners, you'll see a total of about 28,385 have traded so far here, listeners. You're right, the rest of them smaller than that block. That was a big block, which gives it a little bit of an air of the newsletter flavor about it. 1,400 then went up a little bit later for 40 cents, 850 for 35 cents, 818 for 44.7 cents, and so on and so forth. And the blocks keep getting smaller, 500, 400, 300, 200, all the way down to the little blocks the Rock Lobster was alluding to there. So still a decent-sized paper there in the beginning, but you're right. Maybe someone has the whiff of something in the air. So you know what we're going to do whenever we see that kind of paper, listeners? What do? We mark that one and to be watched as well. Let's see if our friend here, because he's not exactly wasting time. He's saying October. October is the jumping off point for all this madness. So this could be very well-timed paper, in which case we'll keep an eye on this. And I'm guessing maybe our friends at the SEC could too, if it turns out to be what the Rock Lobster predicted. But before we denigrate any further, they could just be out there having some fun in the upside of calls. As we keep on moving to our final name, this is the newcomer to the odd block. This is ATUS USA. This is a cable operator in and around New York, it looks like here. Ticker symbol ATUS, ATUS. Trading today, 29.5, up a half a buck, so nearly 2%. Good day for them. A year ago, they were trading way south. They were trading 17.40. And it's kind of been a long, slow upside run to pretty much where it is right now, right around the top. This is pretty much the 52-week high right around here, 29.60. You got up about 20 cents higher, but this is pretty much right at the top here. So a name at the top of its 52-week range. Not surprising. Calls leading the dance out here again today. You got nearly 5,000, 4,975 of the SEP 30s, so pretty much at the money calls right now. Going up, looks like right near the offer for 47 cents. There were 40 cents at 50. This is opening once again over there on the Philly, but to keep with our earlier point, that was just the beginning of it because a lot more have flown in since then. Total of over 16,000 have traded on that strike so far today. So SEP 30s in ATUS. Also action. Mr. Rock Lobster, maybe we got the whiff of two corporate action, two takeover target type names here because this is a lot of paper on the SEP 30s for contracts that are going out in a month or so. That's a lot of paper, 50 cents. Are you feeling the same whiff about this one, sir, that you were feeling about the Kate Spade and other stuff earlier?
Well, when you look at it, I mean, again, here's another one, 4,900 contracts, now 25,000 contracts. You buy out of the money calls, and on the same day, they're already up money. I mean, I don't know about you, but how many times did that used to happen to you as a trader?
Oh, just daily, sir. Didn't happen to you every day?
Daily. So huge volume, huge pops and vol. So you have to look at this and go, well, oh my word, that is quite a power move, right? So all I would say with that is somebody likes it in a huge way. I can't how speculative this is. So let's see. Consumer television services. Maybe they're produced, something, but it has the same kind of thing where, I think people are buying some cheap options. We just had this, well, I know nothing's been solved in the trade war, but everybody's happy. So it's hugely speculative option purchase for, 2.5 weeks.
That means
all I'm saying.
That means they're also going. We got 3 for 3 today, Mr. Rock Lobster, going in the to be watched category. So we got some interesting paper afoot out here, listeners. By the way, total, as you said, there was 16,000 coming into the show. Now over 25, nearly 26,000 on the tape of these SEP 30s. And you look at the top trades out here, it is all SEP 30s. The big print we noticed here, but then also 1460, then 864, then 534, then 503, and 500, and so on. Big blocks of 500, 400, 300, 200, all the way going down, filling the whole page here. So it's SEP 30s or bust out here. So yeah, we got three pretty high pressure trades going up here, listeners, that we want to keep an eye on. Meanwhile, speaking of pressure, I know he doesn't feel it. It flows off his back like water off a duck's back, because it's time, listeners, it's time for Uncle Mike and a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's time for a rare Thursday edition of the strategy block. No show on Monday. Uncle Mike, he couldn't wait another week, rest of the week and into Monday to do it all again for you. So he had to do a strategy block for you today. Uncle Mike, as I said at the top of the show, it's kind of your type of market. Silver moving, the equities rallying, dogs and cats living together. Everyone's having at least a joyous time today, holding hands, singing Kumbaya. So what is on your radar for a bit of strategery in this Uncle Mike type market, sir?
Well, it's a fun market from the standpoint that stuff's going up, at least today anyway, but it can be less than fun as of tomorrow, as we all know, or as of 1 second from now, as we all know. So with that, what I want to go through today is just kind of what I'm looking at in one of my strategies at this point that might be helpful to our listeners. So one thing that I like to do as a more conservative strategy with a larger section of clients' money is something called a risk reversal. And what that means is that, let's say the stock is trading at $60 a share. You could sell a 55 put and then simultaneously buy a 65 call, meaning that you're doing it for break even, let's say. So in other words, let's say you got $1 for the short put. Likely it's going to cost about $1 for the 65 long call that you're buying. So what you're doing is you're creating a strategy to where if you were to hold everything till expiration, you would be able to actually have no downside risk until the stock were to go to the 55 level. Now, the bad part of that is, of course, that you won't have any upside until the stock gets to the 65 level. So there's good and bad to it. I think it's a good strategy to consider in a more conservative section of the portfolio for what you're trying to do. Now, with that being said, the thing that I'm going through right now is that we actually have markets where we're set up to where we're actually starting to come through what I like to refer to as a magnet market, meaning that we may have a tough time breaking through this 3,000 mark. However, if the market goes to the downside, we may have a hard time getting away from it to the downside. So what I like to do in a situation like this is just hold on to the short put. And by holding on to the short put, what that enables me to do is just kind of sit there and wait and enjoy the fact that time decay is working in my favor. Now, in terms of what time frame you should use, I have mine and my clients will know it, but feel free to contact me. I'm happy to talk to anyone privately about this, but that's all up to the individual investor. But the longer time frame that you have, the less time is going to be working in your favor, just because of the fact that you could have more over time. It just depends on where volatility is. But in terms of the shorter term time decay, in theory, if God were to tell me that markets were to stay still forever, I would be selling daily options every day. But unfortunately, God doesn't give me such direct trading advice. So with where I'm going with all of this is that now I think is a good time to where if you're doing a risk reversal trade, where I am at in it at this stage is I still have a long call from a previous risk reversal that the cost of it, the cost basis of it from gaming in, getting out and doing all that over the course of the last year is roughly a few pennies. So I still have that held over from a previous risk reversal. But the current one, I'm simply just holding on to the short put. So that way, if we do go above the 3,000 level in the SPX, as an example, then I believe that volatility would go lower. Markets go higher, vol goes lower. And what I'm wrestling with right now is the classic battle of Delta versus Vega. So in other words, let's say that the market goes higher. Yeah, I'll miss out on some of the long call profits, but from the standpoint of Delta, but we have volatility working in our favor if the market goes higher, and if indeed it keeps the inverse relationship of Vega versus Delta that traditionally does. So with all of that going on, I feel comfortable just waiting and actually seeing what the market's going to actually do. Because the benefit of all of this, yes, I may be missing out on some Delta, but the real benefit is that I'm missing out on 100% of any time decay that's going to be in place on the long call. So I think with anything in the option world, there's not necessarily a better way of doing things, like this is the right way or this is the wrong way. It's just whatever way fits your own personal comfort level and what you're trying to do with your goals. And that's what I'm trying to do with my goals right now. Hopefully you enjoyed the strategy block. First one of September.
First one of September, indeed. Speaking of first, let's see if we can squeeze on our first listener question of September with a little bit of the quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know how to get at us on all the major platforms, via the live chat, via email, all that good stuff. Just like here from D. Hudson, 621. He says, ECA, I see signs of a buyout with like 5 exclamation points. And he had to share that with us. He said, look at the options chain. ECA, not a name we talk about a lot here. This is Encana Corp. This is a hydrocarbon exploration company headquartered in Calgary, Alberta. And before they sold some assets in 2013, they were the largest natural gas producer in Canada. Fun fact, this is the name that a year ago was looking a lot more robust than they are right now. They were trading a year ago about $13. And they got as high as about $13.60 or so back in October before selling off pretty hard. By December, by the nadir of Christmas Eve, they were trading $5, $5.11. And they've kind of slowly dropped down. The 52-week low is $3.92. They're feeling a little bit of a lift today, about 11 cents or about 2.33%, trading right around $4.50 right now. And they are closing in on earnings. Actually, earnings no, I think they're coming. I'm sorry, they're coming next month. They're the 31st, I believe. So it looks like they may have just recently had earnings. But I'm looking here to see what you're talking about. It is a surprisingly active name here, D. Hudson 0621. They're averaging about 39,000 contracts a day. That's the ADV right now. So that's very active for a $4.50 name, where some people, like the Viceroy, would argue that the stock already is an option. But yeah, today seeing about 7,300 contracts on the tape. Worth noting here that the big print today is the SEP 14 halves going up for 20 cents, exactly mid-market. They were 15 cents at 25. That's opening over there on the Gemini. So maybe that individual trade could overall say it. But I'm looking here too at the top positions. That's kind of where you really need to look to see what's going up out here. And the big position right now are the Jan 2020 10 calls with about 49,000 open, almost 50,000 open there. The number 2 position are the AK 5 calls with 22,000 open. And, you know, at first blush, you might say, oh, Jan 10 calls. That feeds into the takeover. But if you look at how these went up, 61% of those went up on the bid when they went up. These contracts went up. Only 18% lift in offers. So not usually a sign. Aggressive overwriting at the 10 strike. Maybe they feel it'll go up somewhere between here and 10, and they're happy to dump it. But usually that's not the first blush of, hey, takeover imminent. The 5 calls, maybe you have a better argument with those. The AK 5 calls, with 22,000 of those. Those are more split, with actually exactly half the paper of that OI having gone up on the offer. So maybe that's feeding in a little bit more to what you're talking about. That's also the contract. No, the SEP 4 halves are trading today. AK 5s are actually trading today as well. 500 lots going up here or there. It looks like about 1,000 of those have traded today as well for about 15 cents. So maybe you have a little bit more of an argument. out here on these OCFI. Again, this is not a name we analyze quite a bit. I'm not seeing screaming signs of a takeover. Mr. Rock Lobster, is this the name any of your crazies in your pitch chat have come to you with, this ECA, sir?
ECA, is this Encana Corp? ECA?
It is, yes.
No, it's none of my pit crazies. However, Jerry Jones is just out there talking about I'm buying up natural gas assets and stuff like that. Gas is at $2. We're starting to export it. It wouldn't surprise me if, somebody was starting to buy some of this stuff because they've all been in the dumps for so long. And oil's been in the dumps with, the dollar, it was super rallying, and now it's kind of chilled out a little bit, at least until where we are now. So I can see that there could be some consolidation in the industry for sure. I mean, and you got to be realistic. You can buy some OC calls for 15 cents or 10 cents, and the stock's trading $4.55. So it's not, let's just say it is not out of the realm of possibility that somebody brings a cash register.
We've seen crazier things on names like this, but I think that's all the time we got for Encana today. We'll keep an eye on this. I guess we'll put this in our to-be-watched category as well. I don't see a ton of paper that's saying that it's huge takeover imminent. It's not like someone's piling into the weekly calls like we saw on some of these other ones, or calls that are going out sometime soon. But still, it's worth paying attention to. The stock is cheap enough. We'll have to look at some of the underlying flow, too. If there's a takeover, people could be buying a $4.50 stock as well. It wouldn't all be happening in the options. But either way, interesting stuff. Let's keep on rolling into our final segment, see what's interesting for the rest of this week into the weekend. And next Monday, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do it. Let's go around the block. Uncle Mike, it's that time, sir. It's an Uncle Mike type of market. Things are popping off in your neck of the woods. We've got tweets. We've got trade wars. We've got silver and metals. We've got equities. We've got a lot to watch. What is on your radar until we gather here together on Monday, sir?
A Twitter account and the 3,000 mark. We're approaching it, and I'm watching with bated breath to see how the market reacts to it. If we do make a run at it, to see if this can be the time that it breaks the magnet. So that's what I am looking at. Mostly the 3,000 mark, even more than the Twitter accounts.
Ooh, even more. That's saying a lot, sir. That is saying a lot. Mr. Rock Lobster, same question for you, sir. What are you keeping your glued up on your screens until the next time we all gather here together?
By the way, and I unfairly maligned on the noise and on the network? Just asking.
Maybe it was all behind the scenes. No one knew about it until you just brought it up. So now you just unfairly maligned yourself.
I blame Andrew.
Okay, so two things I'm watching. One, Twitter. Besides the Twitter account, I guess people have forgot that this is good for Twitter. And so the stock is at a 1-year high today. So I remember there was back in the old days, everybody used to laugh at me and my Twitter and my mess into this, but it's actually become quite it's a decent little moneymaker. So looking at that, if we can get a trade talk for October, that probably could pull the VIX to 13. But remember, since VIX is looking at options after October, an early October trade date, while they're talking. So I think while VIX can go a little lower, I don't think we're going to see 12 or some crazy number like that again, while there's still that possibility of, I'm hitting everywhere, all going to hit the exits. I do find it, and I posted this in our chat room on Tuesday, that it felt like the Hong Kong crisis and the trade negotiations kind of started moving in sync. Keep your eye on that. Like, the more Hong Kong tends to get back to normal, I think maybe the Chinese will be more apt to want to kind of get some things sort of squared away, kind of like getting things cleaned up, so to speak. So I think there is something to that. But other than that, we have no really big earnings for at least, 2.5, 3 weeks, 4 weeks. So we're in that funky September period, and pretty much the whole market is all on the tweets and on the trade war. So Mr. TOSAW was right, as usual.
right as usual. Unfortunately, listeners, as usual, that music means we've come to the end of another joyous sojourn through the world of options. If you're saying to yourself, I need more of a fix, maybe even with the rock lobster, well, don't worry. We got you covered. In about half an hour, we'll be back. I'm going to make them talk futures options with me, listeners. Stay tuned for that. It should be fun. Come back here in exactly 13 minutes for all that fun on TWIFO. Before we go, let's go back around the horn. Let's start with Uncle Mike Serm. Uncle Mike, these are your types of markets. If folks want to reach out to you for some help in an Uncle Mike type market, where should they go? What should they do?
By all means, go to my website, stcharleswealth.com, for more information, or just give me a call on my direct line, 630-885-0017. And with that, if you're at a point where you're looking at these markets and you feel, hey, maybe I should sell, or what do I do, because you're looking at these highs, give me a call. Because if you remember the pain you felt a month ago when the market pulled back, I might be able to help. So feel free to reach out to me, and thank you.
There you go. Reach out to the man. stcharleswealth.com is the place to go. And Mr. Rock Lobster, they can't wait for a half an hour to hear from you again. They want to hit you up right now, learn more about what you guys have cooking. Where should they go? What should they do, sir?
I think go to optionpit.com. Go to our mentoring page. You can see all the stuff that we offer. You go to my Vol newsletter page. Also, Mark is doing a webinar for free next week on butterflies and kind of how they work. Like, so if you trade these butterflies, you're like, they never work. Hopefully you will learn. You'll learn some stuff. It's next Wednesday. I think it's 9 Eastern time is the time of the webinar. So go to our website and check it out.
There you go. I almost said theoptioninsider.com. You can go there too, but optionpit.com is the place you want to go for those webinars. In the meantime, don't go anywhere. We'll be back in about half an hour. You know, if you're saying to yourself, I can maybe use in the interim, perhaps talking about some reverse calendars, some funky diagonals, all that good stuff, breaking it all down. We got you covered. Going to beam in some fun OPR, huddling up, little Brian and I did. And then the Rock Lobster and I will be back, and maybe some other special guests. We'll see. We'll be back in about half an hour for TWIFO. Otherwise, we'll see you back here tomorrow for Volatility Views. And we kick it all off again next week with even more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.